You're never going to believe this.
What?
I did not go to Starbucks this morning.
Oh,
I know.
what?
I went to Tim Hortons.
Oh, the Canadian Dunkin' Donuts.
Okay, I deserve that. I deserve that.
Why?
Why did I go to Tim Hortons?
Yeah, yeah.
I don't know. Do you ever feel like just like,
Turn it up.
spice it up? Yeah.
Like, that's how exciting we are. You're like, settle down. You guys, I didn't go to Starbucks this morning. I went to Tim Hortons. Whoa, settle down, Erin.
But I got to the front of the line and it's just very different. The vibe is very different. I only mostly gone through the drive-through at
Yeah.
Tim's, but I went into Tim's today and I get up to the front and then I give the guy my order and I say, I'm Erin. And he looks at me like, that's nice. Like, why did I give him my name? So
It's
weird.
because you're so used to doing that at Starbucks and they know you there. Like Starbucks, they're like, they recognize your vehicle and they're like, oh, she's here, everybody. She's
They
here.
do. They do. I know. Anyway, I don't think I should show my face in there again. Today on the podcast, I am so excited. I mean, I knew I became a nerd a long time ago. I've known I'm nerdy, and we all know I'm not cool, especially by that story I just told you about going into Tim Hortons to spice up my life. But I am obsessed with this company. And so I have begged for an interview because I just want to know more. And I think what's interesting about this whole process and my own experience with this company is that so many more people are being aware of the gaps in their financial life. So yes, obviously we want to pay off debt. Yes, we want to build wealth, but there's so many more things that we need to make sure that we're doing that give us a solid financial foundation.
So we're talking with Laura McKay today. I got to tell you, I'm a little nervous about this because she is the co-founder of PolicyMe. Like, she's a big deal. I'm a little
It's a big
nervous about
deal.
what
I
this is going to be.
know.
I'm going to read her bio just so that we know what we're in for. But this
Okay.
is also, just so you know, the reason that I'm scared about this interview, because wait till you hear her credentials. Laura McKay is the co-founder and COO of PolicyMe, which is Canada's fastest growing digital life insurance company. In 2021, she was named one of the Women of the Year by Bay Street Bull. Laura has a Bachelor of Mathematics from the University of Waterloo, and her degree focused on actuarial science, which included learning about mortality risk, the basis of life insurance and pricing and valuation. After her degree, she was employed by Manulife and Munich Re in actuarial science. Like, honestly, it's hard for me to even read this because these words are big.
Can you imagine though if you're at a party and you're like, what do you do? And somebody says actuarial science, you'd be like, okay. And then you just like turn and walk away because you'd be like, I don't even know what to ask you.
Goes on to say Laura then worked at famed management consulting company Oliver Wyman in New York from 2013 to 2018. In this position, she worked with many Fortune 500 life insurance companies and helped them develop growth strategies and solve operational problems and regulatory issues. Is she going to even like us?
She's going to have to talk to us like we're in kindergarten. We're going to, she's going to be like, oh, you two are so cute. That's so adorable that you're asking me these dumb questions.
Okay, well, here we go. Laura, thank you so much for doing the podcast with us. We're so happy to have you here. Erin loves PolicyMe. Erin doesn't talk about any company at all to the get the hell out of debt community until she has done the deepest dive into the company and knows all the things. So she had this brilliant idea to actually talk to someone from the company, and that's why you're here today. So thank you so much for doing this.
I'd already deep dove into all your ex-boyfriends and all of the like all. So anyway,
Thanks for having me. I'm so excited to be here today. So
Okay, but
excited.
now you have to know the kind of people that you're talking to. It's me. I don't know zip. I don't know zilch. I know less than zero things about insurance. So you have to talk to me like you have written the insurance book for dummies. Okay, that's me.
Okay.
Please tell me about life insurance. Why do I need life insurance? And why the heck are there like different kinds of life insurance I'm even finding out?
Most of us are in this state of our lives where we have debt, we have obligations, we have children that rely on our income currently, but more importantly, like our future income. We build our life and our financial decisions around the expectation largely that this income from myself and maybe your partner, if you're in a relationship, is also going to be there in perpetuity for some amount of years until you retire or you're kind of like out of debt, you're like all set in life. And you're given that, maybe you picked a house and you have a mortgage and you kind of assume that mortgage amount based on your current income and your partner's income with some confidence that that's going to continue well into the future. If we're in that situation, we're all walking around with a small risk. Let's be honest, it's not a big risk, but a small risk that something happens to one of us, maybe myself or my partner. And that would be absolutely devastating for a family if someone were to pass away, especially in these primary working years. Insurance is here, life insurance is here to kind of help you mitigate, protect against that risk. It is an affordable option. For most people, you're thinking like $30 to $50 a month. And if the worst case scenario happens, someone passes away, it's a promise between you and an insurance company that they will deliver your family, whether that be your partner or your children, a big lump sum of money that will be there tax-free to help them through this time to adjust, to pay off their mortgage, to pay for their future children's education, just to pay for cost of living expenses. And that's really the purpose of life insurance. Essentially, not everyone's going to use it. And that's kind of how insurance works, that you kind of share a risk with a really big population, and that keeps prices down because some people use it who need it and some people don't. But essentially it's there, and then you don't have to worry about this risk anymore. And in the worst case scenario, if you happen to go through one of these losses, you can walk away from that. Certainly it's not going to take away the grief or the pain, but it will take away the financial just heartbreak that can happen to a family after the loss of a loved one. I mean, I think we've all seen those like devastating GoFundMe campaigns that can pop up after someone passes away to help set up a trust for the children. I mean, this is really a way to like prevent against that in the worst case scenario.
I think it's so cool that you mentioned that, because the part I think that a lot of people think about is like, well, it's an expense right now, but I don't think they're realizing, listen, you're only trading a small amount of money for almost like a big investment later that will assure and take care of everybody. And then they think, well, gosh, I've already got it through work. What difference does it make? So what would you say to somebody who's like, oh, I think I'm covered through work?
I would say dig in a little bit more. From what I know, group policies, which is kind of the term used for the insurance through work, it's like a group or association policy. They are typically covering like 1 time's income. So don't get me wrong, it's helpful. It's a year of your partner's income if something were to happen to them. But again, as I said, usually when we are setting up our lives, we are making financial decisions with this assumption that like this income is going to be there in some perpetuity with some confidence. And I think the 1 times income is usually not enough. And for most people, they're looking to supplement it with another policy that can be, maybe a lump sum of 500,000 or even up to $1 million, just to make sure that if anything were to happen to their family, that they can just take away that financial heartbreak. Every group policy is a little bit different, but the most common factors is like 1 to 2 times income. And when you're in your prime debt years and you're like prime early young kids, working parent years, I find that's usually not enough. As you get out of those, as your children are older, they're becoming into an age where they can start becoming kind of their own financially independent beings. And your mortgage starts getting paid off. Like that is probably enough at that point. And we're really talking about those like 20-ish years where you just really have that like high amount of debt and serious responsibilities, whether you have kids or aging parents who are just depending on you financially, where you kind of want that protection around you.
Do you want more? I know you do. Why wouldn't you want more?
More
of
what? What do I want more of?
More of this. Come hang out in the online course, Forget the Hell Out of Debt. The link is in the description. You just got to click it, sign up, and we'll see you in there. Yeah. And the thing I always think about too is like when somebody loses their job, which happens, right? It's always unexpected. Nobody, the day they lose their job, thinks to themselves, oh gosh, I'm going to lose my life insurance coverage. So it's not until much later that they
Yes.
realize, oh gosh, and there can often be, something that happens in that time if they don't think to replace it.
That's definitely another risk of some of these policies. It's like it doesn't transfer with you. If you lose your job, you can lose it. So it's
Yeah.
always nice to have that other cushion outside of that.
Now, in my life, I have been obsessed with Ryan Gosling, Jason Bateman, Taylor Swift, Yo-Yo Ma, embarrassingly, Yanni, like a lot of things, right? But I am obsessed with PolicyMe, which is weird because I've never loved an insurance company before. But as everybody who's been listening to the podcast for the last little while knows, I was searching for insurance, did it online, was blown away by the ease, the detail, the customer support, like everything. And so I was like, who are these people? And you are a co-founder of the company. So Keri and I want to know.
How does this happen, Laura? You are like a mathematician.
You're a genius.
Yeah, so you're like clearly a genius, like 100% smarter than me. So how do you end up doing insurance? How did this start?
I know. I mean, I asked myself that a lot of days. As you mentioned, I studied math at Waterloo, but more importantly, I studied a branch of math that is like really connected to the insurance industry. It's called actuarial science. It's like the study and probability of risk. It's very like statistics focused, but its most practical use of this like theoretical math is within the insurance industry because there is, as an industry, you need to kind of estimate your probability of claims and of loss and like bring that all forward to present value and then understand how much capital you have to hold against this. And so I just, fell out of Waterloo, fell into the insurance industry. I ended up going to New York actually and did some consulting work for one of the big consulting companies there. Once I got there, it was pretty obvious that, like, okay, let's use your math background and let's have you consult for big insurance companies. So I kind of continued in this insurance world. I spent 5 to 6 years working with really, really large insurance companies. We're talking like Fortune 500 US insurance companies on strategy work, thinking through kind of how are they thinking about serving a new generation that's like more digitally savvy, kind of like thinking about the millennial generation and their needs. How are they kind of adjusting themselves to be more technology focused? And while there, I started getting frustrated. Like things work slowly. You can't feel the same amount of impact you would if you own your own business. You're kind of a wheel and a cog in some ways. And I started looking outside of consulting and saying, like, what could I do? I was like enamored by the tech industry. I mean, we're talking like 2017, 2018. This is like peak tech, and seeing all this innovation in the US market. And then myself and my two co-founders kind of got together and we started talking about insurance market and the Canadian market and just looking around and saying, no one's doing anything about this. Like insurance is so painful. Everyone hates it. It's so expensive. Like there's got to be a better way.
Yes.
And
Yes.
we came in and we're like, there's got to be a way to make life insurance more affordable, easier, kind of simpler for consumers. And
Yeah.
that's where PolicyMe was born. We started kind of like 4 of us in a room. We're now almost at 80 employees and growing and like really, really seen a massive growth over the last 6 years. So it's been a wild ride, but we've always stuck to that value proposition that we came into starting the company with. Like, how do we make this easier, more affordable, more accessible for Canadians? And I hope we're doing a good job at that. There's still work to do, but it's one step at a time.
Well, it's funny because we talked about you and we have a huge American audience. And I kept saying to them, I'm trying to find something comparable for you. And I'm going through the US with a fine tooth comb. And there is just nothing that compares. Like everybody around the world, our Australian audience, our UK audience is like, what about us? What about us? I'm like, I'm telling you, these guys have got it. They've got it figured out. Everywhere else that tries to be close is too clunky on the back end, or they don't underwrite up front. So there's a global opportunity here, I think, for you eventually.
Well,
Good
like you
to
said,
know.
here's the thing. Erin and I do this podcast, but to be honest, we don't want to talk to people. So the fact that you have a website that is so easy to use, I was just on it this morning again too, having a poke around. And it's almost like doing like a Cosmo quiz, Laura. So fun just to fill out the information. Like each page is pretty, it's super clean. Filling out my information was easy and you almost made it fun. And that's saying something when it comes to insurance, I
Yeah.
think.
We spent a lot of time kind of adjusting the current language and the questions asked just to be a lot more user friendly and like a lot more intuitive. In some
Yes.
ways, you go and fill out these 10-page paper applications and you're just getting lost in the legalese type language. And I think we really spent a lot of time when we started the company thinking, how do we word these questions? How do we make people also feel like a little bit comfortable going through it so it's not too intimidating to see if they're approved right away, that sort of thing. So
That's always good design, right? When art meets function, it's like, that's how you know you have good design. So we reached out to our community and said, what do you want to know? And so they sent us a list of questions. They were all like, as it turns out, people have a lot of insurance questions. And I think more accurately, a lot of insurance assumptions. So we'll just start off with a easy one. Michelle wants you to explain front end versus back end underwriting, and Amber wants to know which one you do. And this came up because Amber said, do they underwrite up front? And Michelle goes, what even is that? So we thought, well, let's hit you with a double whammy and let you take that over.
yeah, sure. So I'll start from the beginning. What is underwriting? I mean, underwriting is generally a way for an insurance company to understand your risk profile. When you think of life insurance, there's probably two things generally at a high level. I'm simplifying things that affect your risk of mortality, the risk of you dying kind of prematurely, let's say. One is your health, your family health history, your health history, like generally. Have you gone through any recent severe illnesses or diagnoses that we should be aware of? And the second one is lifestyle. Do you get speeding tickets once a week? Do you go and like jump off? I don't know.
Yeah.
Because there's some crazy hobbies out there, right?
Yeah.
Like, are you a pilot who every morning before work, like jumps in a handmade helicopter and goes for a ride? So that's underwriting. And essentially, this is how insurance companies try to keep the prices somewhat affordable, is that they are probably looking at your risk profile. And for some people, unfortunately, they may say, like, you're postponed for right now, try again in a couple years. Or for some people, they may say, your risk is a little bit higher than like a standard risk profile for us, and therefore your premiums are just going to be a little bit higher. So this is the step that they take to kind of assess your risk. I think when the question comes about like, do you do it upfront or afterwards? There is this concept in mortgage insurance. So essentially, when you go to get a mortgage, you're typically offered the opportunity to insure that mortgage through like a life insurance policy. It's called mortgage insurance. Make it super easy, like check this box and you're insured. By checking this box, you're like agreeing to a bunch of fine print around these. I think it's like 2 or 3 questions, but essentially it's pretty like wide in scope that you're agreeing to, but they're not going into the weeds with you. They're not saying like, well, you declared you recently diagnosed with diabetes. Let's look at how well that diabetes condition is being controlled right now. Sometimes they'll actually have you go through like a nurse visit. And that's what I think she's referring to with like front end underwriting. Like, are they doing that up front so I don't have to worry at claim time that they're going to find something that they should have found already? Like, just do the strip search on me, like make sure I'm definitely protecting the integrity of my approval and my claim. And like, let's get that all in front of so I can sleep easy knowing that claim will be paid out. We do that. So as you'll see, like you're going through a pretty detailed questionnaire. For some people, it can take like 20 to 30 minutes, depending how complex maybe their health history is or some of their lifestyle choices are. But that's all done up front. And then it becomes a lot easier at claim time. As I said, there are some policies, mortgage insurance being one of them, where they make it super, super easy up front. But then when the claim comes, that's where they start doing all this like checking and making sure you actually were eligible for the insurance at time of application. For some people, that could feel like you are leaving something to chance later on. In all likelihood, that claim is going to be paid out. I'm not trying to fearmonger here, but generally there is a little more risk to leaving some of that checking to the end.
I thought that was such a great question. And you answered it so beautifully also. Yeah.
Kendall and Tabitha both wanted to know about how honest they should be when they're actually telling you and they're filling out their PolicyMe questionnaire. How honest should they be about the conditions that they have? Tabitha does sports, and so she has a lot of injuries that she gets. Kendall has some back pain, but she hasn't been diagnosed. So how much should they disclose when they're filling out their PolicyMe?
I mean, it's a good question. My personal opinion is just share it all. Again, protect that integrity of the approval so that you can feel confident that at claim time, like they know everything about you. Nothing's going to come up. Like it's going to be a quick and easy claims process. I think generally don't be scared that like something like, spraining your ankle once a year is going to mean anything about not getting approved for life insurance. Approval rates are very high, and then for most people, like there is a very high threshold of insurability, a very high threshold. We still insure skydivers, we still insure people who do backcountry skiing, we still insure people who perhaps recently, or not super recently, but in the past had a cancer diagnosis and are since like fully recovered. So I think generally don't feel as though you're going into this process and it's like, if I say something, I'm going to immediately be declined. The threshold's very high. And at the same time, you just want to make sure that you've disclosed everything and nothing's going to come up at claim time. So it's always best to be honest in these applications.
I think that I'm probably very easily insured then because I'm not skydiving.
Yeah.
Do you insure people that wear sweatpants and are essentially cat ladies?
Yes. Yeah, I think you'd get through with no issue.
Sometimes I drink 3 coffees and my heart rate increases.
That's right.
Abigail says that my husband and I are trying to decide when to buy term insurance. We both turned 25 this year. He's thinking ASAP because we know it's cheaper the younger you are, which I think we have to correct people's thinking. And it's like, it's cheaper the healthy you are, right? It's not just age related, is it?
Yeah. So I would say the main factors that affect price is age. First and foremost, age, because the younger you are, the less likely you are to pass away in the next 20 years, right? Like if you're comparing a 25-year-old versus a 55-year-old and you're trying to assess what's the probability of that person passing away in the next 20 years, it's going to be higher for the 55-year-old.
Oh, okay.
A given. The other thing is smoking status. It's just something that has been ingrained in the insurance industry for probably, don't quote me on this, but I would guess over 50 years where, they just have been tracking that data in big kind of national populations for a very long time and have noticed that mortality rates are quite different between those two groups of people. And so that's one that they are checking for. Gender also very small change in price, but generally females live longer than males, so like that comes up sometimes. And then health, and then health, but it's kind of like a binary yes no with sometimes a little bit of ratings that go a slightly higher, but it's not as dynamic as you probably think it would be. I would say the more dynamic fields that would like affect pricing is going to be like age and smoking status.
Okay, because then she goes on to say, we don't have a house or kids yet. So do we hold off until later or should we get it as early as possible? My gut is saying, okay, she should probably get this now.
Yeah, that's a typical kind of sales tactic. It's just like get it while you're young because it's cheaper. I think it fails to look at a set of like a whole financial picture and say, what's your current situation? Do you have a lot of debt? Like maybe your money should really be going towards your debt at this age because truly you don't have a ton. Maybe you can assume that your partner would be okay if something were to happen to you. You're young enough, they could move in with their parents, or there's some other situations in which, there's higher priority things that need to be put in front of life insurance because you don't have kids yet. The really small risk you're taking if you don't have that like need today is that in the time between now and the time you need life insurance, something happens about your health. Thinking like if your health were to deteriorate or you have some major episode of some diagnosis of some illness, you could become in a situation where you're ineligible in 3 or 5 years, and therefore you're going to be kicking yourself wishing you got it 5 years ago. So, if you're 25, like the likelihood of a health episode in the next couple of years while you're focusing instead on building up your emergency savings account is pretty low. So it really depends on your risk tolerance for some of these things. I think sometimes like a small amount, you could probably get 100 or 200,000 for like $12 a month or something, and that could put you at ease. But
Yeah.
I wouldn't over insure for all these like future potential expenses in your life that you might need in like 10 years, because I bet that money is better off going towards paying down your debt or building that emergency savings account and things.
It's such a great way to word it, is like the budget piece of like, just get a little bit that gives you that peace of mind.
Yeah.
And then, yeah, you can always adjust it later. Do you remember
Yeah.
being 25, Keri? Like we would bend over and we didn't go, oof.
When I could get out of bed and things didn't creak.
Yeah. Stay up
Eating.
till 2 a.m, get up at 4 and go for a run. Like no
I,
problem.
I do remember those days, but barely, because also my memory's going. Do I need to tell
Oh,
PolicyMe
no.
that?
This was a great question from Kim. I loved it because I can just picture this conversation between two partners. Kim says, how do I talk to my partner about insurance when he thinks it is all an overpaid scam? Like we hear that a lot, right? There's just people out there who are just anti, and probably because they've been sold something in the past that they didn't need. So what would you say to Kim?
I think one way we typically talk about this with partners is think about a joint policy. We have a way where you can buy a joint policy, which means you're both insured. And if you remind that partner of yours, if I were the one to pass away, by the way, you're getting this huge lump sum of money. Because insurance, by definition, is like one of the most selfless things you can do because you literally will never use it. Like you're paying for something that is not going towards you. But if you get this joint policy, you could see a situation in where like that partner does benefit from the insurance themselves. So it's like, think of if I passed away, think of my crazy weekend that I'm about to go on somewhere, Don't you want to feel protected against that? So I think that typically is how you approach the conversation, is not just getting insurance on one person in the partnership, getting insurance for both could help a lot.
And I also think too, just explaining like how it makes you feel so that partner understands too, right? So that you could say to your partner, like, listen, like, I know you don't, but like for me, this even a little bit would make me feel like if something happened to you, I would be okay. And so let's find an amount that we both think is okay for the budget and would make me feel like I'm not going to be in a big mess if something happens.
Jenny has a question that's along the same lines. She says, my fiance absolutely refuses to consider any kind of insurance, and I am a stay-at-home mom to our 2 kids, and he pays support to his 4 kids with his ex. She says it's super frustrating, but I also want to look out for me and my 2 kids. Can you have an insurance policy on your significant other or a joint one without them knowing or consenting?
Yeah, I wish I had a better answer to that, but unfortunately not, because you need to, again, the person who the insurance is on is the person that the insurance company is trying to build that risk profile around. And so they really need to be part of answering those questions and like declaring their health history and things like that. So it's not easy. It's really sad to say, but we have a lot of customers that come to us when something tragic happens and they're like, extended circle, or like maybe there was a health scare with their sister, or like maybe there was, a really sad thing that happened in their community where someone passed away. And I think sometimes those are opportunities to have these discussions and say, listen, these risks are like small. Again, let's not fear monger here. It's not going to happen to someone tomorrow walking across the street in all likelihood. But it does happen for sure. And I think you can use those moments to have this conversation. And it's pretty common that those can be triggers that people have. And that's what kind of wakes them up and has them just like, I need it today. I just need to get it over with. That's why we make it super easy as well, because you can kind of take advantage of these triggers. It doesn't drag on for 3 or 4 months and just get lost in like the mess of like administration, it's just like, go apply. You'll probably get approved right away. You can kind of like put in your credit card details and just buy it and never think about it again. It'll be
If
there
I'm
for you.
Jenny, the words I'm using for my fiance is like, it would be meaningful for me if ... right? It would be meaningful for me if we could look at even doing a small policy so that if something happens, I know your 4 kids are taken care of over there, but I want to make sure that I'm good. It can be my birthday present. You know what I mean? Here's what I'm going to do. Keri and I always joke that when I die, I'm not having a funeral, but I'm sending out a mass video to everybody, right? From beyond the grave. And it's going to be like, listen, don't come to a funeral, whatever. Just turn your phone off. You can tell your boss you're going to a funeral, but spend 2-3 hours with the people that you love, like, fully present, blah, blah, blah. But I think it'd be funnier if I did a video dead, right? Beyond the grave. It goes out to everybody we know and it says, did you get life insurance?
Oh man.
She's taking care of us from beyond the grave, even.
That's right.
Thanks, Erin.
Now do you wish you had it? Anyway, sorry. Cherise says, is it better if my insurance is paid out to a person or to my estate?
So this is kind of one of the interesting parts about life insurance. It bypasses this kind of process called probate that can be expensive and kind consuming, that kind of goes through the court and determines based on someone's will what assets go where and how you distribute it based on the person's wishes. Life insurance, you can say like, no, don't go through all that. I know who I want this to go to. I want that to go to them like quickly. I don't want them to like get lost in this whole probate process. And that's by designating your beneficiaries right on your life insurance policy. It's important. Put the people you want, keep it updated, look at it once a year, make sure any other living kids have been added to it or any changes in your partnership have been like adjusted for. But I highly recommend you designate your loved ones. You think through the process. Who do you want it to go to first? Who do you want it to go to second if that person isn't alive anymore? And essentially just like get that details on there and keep it up to date. So highly recommend you designate beneficiaries, not estate. Estate gets complicated. It takes a little longer. And really, those loved ones are feeling that like financial impact almost immediately. There could be an expensive funeral, maybe not for you, Erin, but like definitely for others. They could have that sitting, kind of stressing them out. So I definitely recommend designating your beneficiaries.
How quickly is that process? So let's assume worst case scenario, someone passes away. How soon can they access money then?
Yeah, that's the magic question. I wish I had a perfect answer. There's rules around this. Like once insurance companies have all the information they need to act on that like super quickly and pay it out. There is this like 2-year process. In the first 2 years of a policy, there is some risk of anti-selection in those 2 years. So if someone buys the life insurance policies and passes away within 2 years, maybe it's 6 months later, there's just a flag that goes up in the insurance mind and says, okay, did this person lie in their application? Were they in a more unhealthy state than they were? And therefore we need to go into this and like investigate a little bit more. So in those first 2 years, if unfortunately it happens very close to when you bought the policy, there probably is more of a process, investigative. People don't have to be worried about this. Like claims still get paid out, but there are situations where fraud has happened and insurance companies kind of do their due diligence here. Once those 2 years have passed, the process is a lot quicker. So it can be as quick as like 15 days or 14 days. It's not 24 hours, unfortunately. It does go through some like hoops, but essentially that check gets mailed out pretty quickly once those 2 years have passed.
I think that's so important. I think that's the reason right there when people say like, should I or shouldn't I? Especially people without kids or whatever. And they're like, oh, I've got all these other assets. But the speed with which those will be distributed could be a financial detriment in and of itself.
Yeah.
And that's why I think that life insurance is such an important part of taking care of the people that you love.
Yeah.
Especially if you're the kind of guy who like skips Valentine's Day all the time. You know what? You can make up for it later. Life insurance. Life insurance.
Shelly asked us, she says, often you get what you pay for. If a premium is less, you are getting less coverage somewhere. So what are the key things you need to look for and compare in a life insurance policy to ensure you have the proper protection?
This is a really good question. I would say this is where the life insurance industry is a little bit different than other industries in that the terms and conditions are pretty industry standard. I mean, if you are able to produce like a death certificate, that claim will be paid out. It's a lot less complicated than like, does it meet this complicated definition of kind of a property claim? So I would say it's a much more standard, so everyone can rest easy that way. I would say some of the things people are looking for is kind of the ease of administration. Like they definitely want to make sure that if they need to change things or if their kind of family needs to go through a claims process, they're feeling confident with like the customer service and the administration of that company. How long the company has been around, our policies are backed by a much larger insurance company that has been around for a lot longer than PolicyMe. So kind of looking at the stability of that insurance company that's insuring you. And then price, you'd be shocked, but like the price is very different across companies. And that's because some insurance companies, they have like a pricing strategy where they may be doubling down on like a demographic that's not you. So there's definitely insurance companies that are like targeting 30 to 50-year-old females or something. And they're like, we want to beat the market there and we want to be the best price for this demographic. And we got to kind of like increase these other demographics price a little bit more to make up for some of the maybe loss they're taking on their primary demographic. So just, I would say price shop around, see what you find. I wouldn't assume that like the price you're finding is market competitive until you do your due diligence.
Yeah, I looked at your website, like I said, Laura, and right on your homepage, you break down like what other insurance companies typically charge and then what you charge. So how are you able to have like a better price? Like tell us why we should go to PolicyMe. I mean, like I already am on board, Erin's on board. How do we get the rest of the people to come on board?
As I said, we are first and foremost a technology first company. We are constantly looking to remove some like of that cost from the system just by making it more technology advanced, quicker, easier, less complicated to apply. Very luckily, that also correlates with being like a little bit cheaper to administrate, and we pass all that money back to consumers. So that generally means we are, if not the most affordable, like the top 3 most affordable policies for you in Canada. So check us out. We make it easy. We have advisors who are here to like talk to you if you have questions. We're easy to get in touch with. We're easy to email. We even allow you to text us if you have questions. So go see if you're eligible, see if you're approved, see what your price is, and then you can make a decision from there. But we make it very easy to get that first step. Like just get approved, see your price, and then you can have that decision.
Laura, we were so worried that this interview was going to be terrible and awful and boring. And you are so cool. Like, I want to be friends now. Can we hang out? What's your Starbucks order?
I do love Starbucks. I am obsessed with ice drinks these days. I don't know about you guys, but I will always join you at Starbucks for some.
Yes. Okay. That's where we're going next because I just want to hang out and learn more about you.
So, friends, if you are Canadian or you know a Canadian, you are going to send them this podcast and the links that are in the show notes so that they can get this handled today. It's that thing that's looming in the back of your mind that you know you need to do that you probably haven't done yet. You can have it done in 20 minutes or less. We're going to set you up, and then you get that total peace of mind that Laura was talking about earlier, and we want to see you protected.
She's so good, and I am so happy to talk to her, and I love seeing these strong women. Like, she's smart, Erin. She's a mathematician.
More than that, she's won awards for her brilliant brain.
Mm-hmm.
she's worked with Fortune 500 life insurance companies. Like, she's not small potatoes. And she came on our podcast.
I know. And it felt like it was just a fun conversation. Like, now she's in her circle. And could I text her? Am I allowed?
We better check with her people.
Oh, shoot.
You would just show up at her office with a, iced coffee. You'd be like, hey,
Laura, hi.
Remember me?
Remember me?